My name is Reda. I was a professional investor. Most of my career has been in the fintech space. We built a company before Aries that sold all types of market data. At the end of the life cycle of that company, we basically surveyed our customers, trying to figure out what our next idea was going to be. We wanted to do something a little bit bolder. Most of the guys came back with like, "Hey, we have a problem with our brokerage." So we had about 70,000 clients. It was clients from all demographics. And at the time, Robinhood was getting really popular. So for clients outside the US, Robinhood doesn't exist. And we just kind of naively were like, okay, we're going to build a brokerage that globalizes this idea of commissions-free investing. And now Aries is a trading platform available in 130 countries. We do commissions-free stocks and options, but we also offer access to futures, index options, equities, mutual funds, and cryptocurrencies. And the whole point of the platform is that it scales with the investor alongside their journey. So it starts really simple and it can be customized all the way up to super advanced. That way you don't have to have like 6 accounts to do one thing with your money.
So you grew nearly 600% last year. What's been the key to your growth, and how do you plan on continuing to scale?
Sure. Most of our growth was driven organically, right? But the latter half of the growth, I think, towards the tail end of the year, we grew primarily because we started introducing tools that were pretty expensive elsewhere for free. And that's for the reason we can do something like that is, our infrastructure is fairly new. So we're competing against companies who have billions of dollars, but they were also built in like 2005, 2010, right? And that when you build something 10 years ago, it has a bunch of spaghetti code. And with Aries, because we're built really lightweight with a normal and regular sort of modern infrastructure, we can start taking a lot of these tools and building them on top of the data that we're already pushing out to the front end. And that resonated with our client base a lot because it's like, why would you go pay $200 a month for this data tool if you get it for free on Aries? That was pretty big. And like going into this year, our growth has really mostly continued. And the reason for that is people are really resonating with this idea of we can own a piece of the upside, through StartEngine, but at the same time, it makes them like an evangelist. So I can go into the Aries Discord and tell these guys what to build. They'll push it like 2 or 3 weeks later, and I can actually I can participate in that upside because I'm also an investor. So if I have a suggestion, for example, that 10 other people get to use, that 10 users worth of enterprise value that I've created, I can participate in by buying stock directly. And that has really created this sort of like a crazy feedback loop where we're building exactly around people and people really resonate with that.
Kind of going off of that, you mentioned like you're building new features based on user feedback. Can you elaborate on one specific example of that?
Yeah, sure. So I'm pretty active on Twitter. And this morning I was on a space with a really big influencer on the on sort of the financial Twitter side of things. And last week he suggested that on the right hand side of the application, he wants to see the stocks that he selects on a watch list. Right. And he made that last week, and I think we're going to push it this week on Wednesday. So people really like this idea of being able to interact with the platform where they're managing their money, because it doesn't really happen often, right? Like you're never going to see the CEO of Fidelity hopping on a Twitter space to talk to people about exactly what they want. And you're definitely not going to see a large corporation 2 weeks later pushing that thing.
That's true. A quick turnaround is always good.
Yeah.
How do you balance short-term profitability with long-term sustainability?
We're in an interesting space. So Aries is a VC-backed company. We've always been like sort of it's always been like growth over profitability. And the truth is we are in a very lucrative space where we could be profitable. It's a matter of like in the United States of America, there exists a lot of licensing and regulation regarding being able to pull revenue out of clients for like trading and commissions and et cetera. And Aries doesn't have those licenses yet. So what we did over the last year, especially with our pre-seed round that came from the venture capitalists, is we took that money and we built our platform on top of TradeStation, which is a registered broker. They've been around for 40 years. And we tested this idea, right? We tested like, hey, do people in these countries want to trade stocks? Is this something that could be profitable? And, we drove like our clients, our average session time is about 40 minutes. That means the time between someone opening and closing the app is really high, especially in comparison to our competitors. Our ARR, the ARR that TradeStation reports per customer is about $1,200 based on their filings. So the truth is, of the 10,000-ish customers that we have at Aries, those are our clients. And the second that we hit this FINRA Civic milestone and get this licensing, we can start pulling up from the revenue that we've been driving towards TradeStation. And the last year or so, I think something, when you take a look at the Form C, and probably the largest question that I've answered over the last couple of weeks is, we did a lot of testing and a lot of iterating. And because of the nature of the business that we're in, without the proper licensing, we can't actually pull cash out of that. And because we are in the process of getting this licensing, we're only 5 months away. Aries is largely a company with a good amount of clients and is on a definite path towards profitability.
That's great. So my next question is, how does the team's background align with the company's vision, and why should investors have confidence in their ability to execute your mission?
Yeah, I think in general, like the ideal investor for Aries is someone who is used to using our software. My co-founder, he comes from a decade at the Canadian Imperial Bank where he was leading software teams. And our last company built software for people. So we already have this sort of persona when it comes to building financial software. And I think the ideal client for Aries would be someone that knows that we can build the software, someone that listens to us on Twitter, someone that is in our Discord, someone that maybe perhaps has a gripe with their brokerage already. Maybe, the execution speed on Robinhood is really slow, or maybe, you had a problem with Fidelity, or maybe you're tired of having 5 accounts to manage your money. If those are all things that resonate with you, then it's something where you should check out our Discord and you should make suggestions towards fixing it. And if you're willing to make those suggestions towards fixing it, then I don't think it makes sense not to try to get in on that upside. So really the idea is more so you're buying, it's not us that's creating anything, like besides the regulatory licensing and setting up the infrastructure for customer support, et cetera. Most of the application is built by our clients directly in the Discord. And if you're willing to participate in that community and willing to make things happen, then you are our ideal customer or ideal investor.
How does your team's background align with the vision?
We've only ever worked in fintech, right? Our last company was 70,000 retail clients around the world just trading stock market data. This company is in fintech. My co-founder, he spent a decade at the Canadian Imperial Bank leading teams. He was a scrum master at the Canadian Imperial Bank, leading teams, building financial software. And before this, I was a value investor. So it was a lot of research heavy investing. And I'm really aware of like paywalls and expensive data costs. So this is like literally all we know. What we're trying to do is solve problems for ourselves. We're not going after a market where we have no experience. We're not going after a market where we don't have the connections. And even if we are, we really have the best partners in place to make sure that we're filling these gaps, especially because we're dealing with people's money. This is not a game. We have a lot of fiduciary responsibility at play. So where there are gaps in our knowledge, we have TradeStation and TradingView and Benzinga and some of the largest financial companies sort of there to fill those gaps.
Yeah, I love how you said you're building it for like investors, like even yourself.
Yeah, I mean, look, this is mostly for vanity, but I've got like 6 screens behind me because this is all I did for a living. So I understand we're not doing this for free. Obviously, we're trying to build a massive company. We're trying that is the goal. We're trying to make money, but the truth is, I believe that sometimes people get the value exchange just misconstrued. Like a lot of people try to build things to make money, but the idea behind money, at least for me, is if I can give you enough value, then I'm going to make more money, or I'm going to make money. That's how I like to think about making money in general. So with Aries, all we're trying to do is give people a bunch of value at scale. And if I can make your investing, like your financial, if I can make you 5% financially more literate, but I can do that for 1 million people, that's sort of the end vision here. And I think that, if a lot of companies focused on that and just built around the client, you would see a lot of success.
That's really true. Building for the client instead of just thinking about, I think the money follows when you really kind of like get those users.
Yeah, definitely. I mean, people resonate, right? I think we've been on StartEngine for about 10 days and we're at $300,000, a little bit over $250,000.
Mm-hmm. That's huge. Getting clients, like getting investors and to believe in you and invest in your product.
Yeah, it really is humbling, actually, when you put it like that, right? Because it's like, like I've ran businesses my whole life, so like I know I've seen large numbers and I understand, but like it's a little bit different when someone is giving is like if someone is making an investment, betting that the thing that you're building is going to work, and there's hundreds of them. That's like it's like okay, like it's like now I have a real responsibility towards making sure everyone like sees a return and is happy with the product.
Definitely. So kind of going off of that, what led you to choose the crowdfunding route instead of, I mean, you've already raised venture capital rounds, but what made you choose the crowdfunding route, and how do you believe it will benefit both your company and your investors who support you?
Yeah, the crowdfunding route is interesting for us. So at the start of the year, we were putting together a $5 million VC round, and the lead investor in that round, their general partners basically got very heated because of the Silicon Valley Bank thing. I think something with a lot of venture debt in their portfolio, and their general investors basically made an outsized capital call. They pulled a bunch of capital away from the VC, and that led the VC to not be able to make any new deals this year. So they pull their lead check, and I'm left with a hole basically. And it just so happened that by luck I had met Howard Marks, and Howard basically, who's the CEO at StartEngine and I believe the co-founder at Activision, he basically convinced us to go the Reg CF route. And then from there, we met with Kevin Morris, who also works in the crowdfunding space, right? Has done a bunch of big companies, and he also convinced us like, hey, this is something that could do well on crowdfunding. And then one thing sort of led to another, and it really just made a lot of sense. If you think about it the correct way, I think sometimes people get scared when it comes to equity crowdfunding because there are bloated valuations, and like it's sometimes you need a VC on your board, honestly, to keep things going in the correct direction. But with Aries, we've created this crazy feedback loop, and it just makes an insane amount of sense for my customers. If they're already investing on my application, then those same people should be able to invest in the product that they're investing on. And what it has created is this. I mean, it's like it's insane. I've never seen it before. People who invest, I mean, it makes complete sense, but people who invest will make more suggestions, and their more suggestions make the product better. The product gets better, their investment hopefully makes a larger return. And I think that is really something that's really pretty beautiful. And I did not think of that before starting this.
That's a really good point. I think when you go the crowdfunding route, a lot of your customers, or even like new people who become investors, it's kind of like either they become customers or they become investors and provide feedback and they love your product. And essentially they could become brand advocates for you if they really love your product and they own part of it.
Exactly.
So my last question for this is, what's your plan on keeping investors and stakeholders informed about the company's progress, challenges, and milestones?
Sure. So we are working, I mean, besides being able to talk to me whenever, anyone can hit me up on Twitter, on Discord. I'm there all the time. And we were there before the raise on StartEngine. So those are all avenues to sort of get updates. We are also mandated to do yearly updates. And then on top of that, I believe even at the investment minimum, you can expect quarterly phone call or quarterly investor meetings, and then going up from there. So there are different perks on the StartEngine page. I believe it begins at a quarterly investor call, and it could go all the way up to one-on-one monthly calls. So it's a variety, but I promise there will not be a lack of updates throughout the process.
That's great. Thanks for joining us on this round.
Yeah, thank you.